Good morning, everyone. Welcome once again to our weekly broadcast, Thursday, 10 a.m. again. So we have around about a 30-minute broadcast every Thursday. Those who attend most weeks are going to know that my name is David Johnson. I'm the CEO of a company called Leo Crowdfunding. We're an equity property crowdfunding platform. And my co-host is Mr. John Corey, and I'll let him introduce himself.
John Corey, Property Fortress, focused as a long-term landlord, tech guy that used to work also investment banking. So really love the convergence of technology, regulations, finance, and real estate.
No problem. And you currently abide in which part of the world?
Well, I sort of have two homes, but I'm primarily right now in the US, having just had an operation about a month ago, which is all fine. Everything's good. So we're enjoying the sort of US spring at this time.
Excellent. Okay. And today our special guest is Hietesh from CurationTech, and I think his JV partner Rahul is going to be joining us. We'll introduce them in a few minutes after we do the intro slides. And most of the broadcast today is looking at their new project that actually goes live on our platform today at 12 noon. So by way of dealing with our normal topics as we do, property market update, we always like just to pick something out as a little bit of sort of tidbit of information that is maybe beneficial to property professionals. I was looking, John, the other day at the Savills March update. Savills always, I find, is a good source of information, the kind of good stats, but also they give like opinions and views as to what's happening. So I always find it very useful and informative. So the two things I've picked out, number one, rental market is still extremely buoyant and extremely strong. And even outside London, clearly you can see there's just a lot of growth in that rental market. And I guess that's fueled by a number of different things, but it's certainly buoyant at the minute.
Yeah, I mean, I think it's quite funny. This is very sort of short-term thinking. This whole broadcast that we're doing started with the COVID lockdown. And sometime after that, maybe 6 to 10 months after we started, there was a lot of press about everybody's moving out of the city centers. All the renters are leaving, all the landlords are panicking, all the homes in the countryside or the bigger houses are being filled up. And now we have this, oh my God, everybody's moving into the city and rental demand's going up. And it's like, this stuff sort of ebbs and flows. Now, the pandemic was a really big one-off thing that happens maybe once every 100 years, so not forever one-off. But this idea that people need places to live, as I've said many times, COVID didn't actually decrease the population that greatly. We have a shortage of housing in the UK, whether you own it or you rent it, people need places to live. And we tend to cluster for certain reasons, whether it's employment or because of amenities in city centers. The historic trend of the last 100 years around the world is urbanization, moving away from the countryside into the city.
Mm-hmm. Yeah, and that's as you say, that's a global trend in many ways. And there might be nuances in a short snippet of time, but yes, the trend is there. I think it's interesting, and we have discussed this before, even offline. A lot of people I meet through my journey in property, and I sometimes refer them as property professionals and there's property amateurs, perhaps not the most endearing term to use, but there are those who this is their full-time income, this is their livelihood, they study it, similar to sport. A professional sports person is a lot different than an amateur sports person by way of mindset and skills, etc. A lot of amateurs I meet almost think that the property market or the prices of property, for instance, it almost just floats with the wind. They never seem to actually analyze the fact there are clear drivers, there are clear factors, there are things that you actually can look at and project trends to a certain amount. There's always unknowns like a COVID, but Savills refer to the fact that right now there is a supply-demand imbalance. That's a fact. You've just alluded to that. And that is right now driving house prices up. because that's just simple economics. However, affordability will probably be a factor in the future that will then drive house prices down again, because right now the cost of living is increasing at a rate that's exceeding, wages. And like, would you agree that that's just not sustainable? At some point, there has to be a correction in that. Is that fair?
I think you said too much. I believe you're correct that when prices are rising or interest rates are rising faster than wages, that has an impact on prices. But the conclusion isn't that prices will go down. And historically, the data doesn't show that. The data tends to show that prices will flatline or grow less quickly. What people tend to do is they stay longer, they don't move as often as owners. Mm-hmm. And people are very resistant to recognize, quote, a price reduction. Family events, personal events will trigger why they sell. So what you'll see, if costs go up, but it doesn't go up in a very sharp spike, people won't be forced out of their home, but they will cut back, they will sort of struggle, but they'll tend to make it work. People tend to pay their mortgage first and the other things later, roof over their head, all that other stuff. So It depends on how rapid. The bottom end of this second paragraph talks about how the war is probably going to make the interest rate rise less. So therefore, maybe it'll be painful, but it won't be as extreme or something. So this whole idea, though, of we're going to go up, we're going to go down, we're going to go up, we're going to, well, that's sort of not what the curve shows us.
Yeah. Was if I peel back just slightly from what I said, then I focused on cost of living and wage growth. I suppose coming back from that slightly, the main point was affordability. If it comes a point that people can't afford to buy houses, then that absolutely affects the price. There might be different factors in that, which independently don't necessarily mean a house price reduction, but in general, affordability isn't there.
Yeah, but wait a minute. If they can't afford to buy, they'll stay where they are. So the agents will get hammered because there'll be no sales, but the people who are staying in their homes aren't selling. So they're not recognizing any deduction or reduction or correction. And what you see is the transaction volume will dry up faster. But we could do this for a while. And the point is, if you do a 10 or 20 year long-term hold, you tend to turn out all right. So as an investor, the focus should be on holding, and it's probably going to hurt most of the developers who are trying to sell at any one point in time, because they can't say, well, I'll just wait 3 years to sell. It doesn't work that way when you're a developer.
Yeah, no, that's a good point. And of course, if house prices, or should I say, if people are not buying houses, then they're probably renting houses, which means the rental market's strong. So it's in some ways, it depends where you are in the game. Okay, so your Ask John question before we go on to our guest today. So the Ask John question selected is, with the virtual changes affected in the real estate sales market due to COVID-19, can you see a future where this becomes the norm, where a buyer never sets foot in a house before the sale is completed?
So I don't think it's going to be super significant. Owner occupiers represent 60% or so of the market. So the largest chunk of the market are people who want to create a home. They want to, oh, honey, I love this place. Let's buy it. We're going to have a family, or Johnny can grow up here, and Mary can, Sally, whatever. There's this whole emotional dynamic. It's a very experiential thing. I think the virtualization, the ability to see the detail without visiting, is a positive to narrow the list. But I still think people are going to want to see the neighborhood. They're going to want to look around. There's a lot of shopping that still happens in the market, like the farmer's market. But for the commodity items that you don't care how squishy the toilet paper is, you just let the delivery boy deliver it. So I think you'll see some changes, and we've had changes, and some will stick. But I don't see that it'll be the typical buyer never sets foot. The typical investor might. It depends on the quality of the information that they can visualize, and they do analysis as an investor. They look at the maybe crime statistics and other things. So possibly it's actually a better, more logical decision than emotionally, oh, it looks pretty good, feels good, or I didn't like the commute or something.
Excellent. Some really good points there. Hope that answers the question for the person that put the question to us. So let's get on with our special guest today. So if I can get the thing here, and I see Rahul has joined us, absolutely fantastic. So let me welcome, I suppose, first of all, we'll welcome someone who is no stranger to us, and that is, of course, Hietesh from CurationTech. He's been on the broadcast a number of times, sharing his wisdom, not just in UK property development, but Hietesh is very experienced in construction and commercial and warehousing, and also joined by Rahul Dixit from Asset Bricks. So I'll hand over to you two guys initially, just to maybe give a quick sort of 1 minute introduction each on your background, and then we'll get into this project that you're launching today. So you're very welcome, both of you.
Hi, David. Morning, John. Thank you for having us. And we meet not, we were on live broadcast about 48 hours ago, I think. It was for the same subject. But now that we're going live for investment today, yes. So Rahul, do you want to start with your introduction? I'll follow you there.
Yeah, hi David, hi John. I'm Rahul Dixit. I'm the founder of a company called Asset Bricks. We are into property development in UK, and so far we have completed close to over 10 projects, from single dwelling unit project up to 41 apartments in a project. So yeah, and now I'm very excited to do a joint venture with the CurationTech and Hietesh for Wates House. Looking forward, and this is for the first time we are for me, I'm going to a crowdfunding platform to raise fund for the project. So it's exciting.
Yes, you're raising for the first time, but without mentioning the name, he's been a founding member of a not very far competitor to yours a few years ago. But yes, it's really exciting. This is Hietesh Sridhar this side. I'm a civil engineer by profession. I am the managing director for CurationTech Holdings Limited in UK, and this is our 4th raise through the platform, I believe, and we have raised close to 800 odd K through the platform, and we are wanting to do Wates House, which is a minimum investment of 200 and a maximum investment of 400K. This is our first joint venture with Rahul, and Rahul has brought the deal to us. He wanted to partner with us on this, and we're very excited. Likewise, just like Rahul is for this particular project.
Brilliant. Okay, and you've already covered a bit there. You've done some raises on the platform already, Hietesh.
Yeah.
You've had one of your projects is actually paid back to the crowd investors at the projected ROI, which was really cool. We've got some brilliant footage of your 5 houses up in the Neaton, and again, Rahul, I love the fact that you've done a lot of projects, and this particular project for 26 units is like probably half of the size of some of the projects you've done. You've done projects like up to 40 odd units, so you're very experienced in this type of project.
Yeah, I know. So yeah, we have done similar sizes, in fact bigger than this a project in the past, and but this project makes it, it's because the size of the whole property in this particular project, that is really massive. It's very impressive building, and it's a very right part of the town. So yes, although we have done projects similar in past, but this project has a special importance for us, and we are really looking forward to complete this. And earlier, of course, when we was doing project, we didn't have a partner like Hietesh. So in this project, we want to see how soon we can convert this into apartments.
Mm-hmm. I think it's worth mentioning, Rahul, that you and I had a conversation about this project, I think about 14 months ago originally. At that point, the planning wasn't in place, but you did sort of inquire about raising equity, but it was really just too early to bring to the crowd. And then as time has developed, you've met Hietesh and done a JV on it. So do you want to just give a, go ahead, John? Yeah.
So why was it too early when it was pre-planning?
It was where we were, and then where Rahul was. They again, we don't want to dive into this too deep, but they decided to actually buy the company rather than buying the actual property. So there was a legal process involved in taking over the company that owned the asset. So that would have made it just a little bit difficult at that moment in time to bring it to the crowd.
Okay, so just to be
complications
clear to the audience that you can raise money for planning. So that wasn't the trigger for making it too early.
Yeah, no, it wasn't just
it was
that.
a deal structure, John. It was the way it was to be structured, who would partner at what stage, whether the sellers want to develop it, whether they want to. Since Rahul has spoken to David, there have been 2 planning applications. The PD has gone through January 2021, and then the new planning app went through in December 2021, which is the 9 apartments airspace planning. So this is the full potential of the project, and this is what everybody was waiting for. Yes, they could have raised money for planning as well, but the sellers decided to move on and to hand it over to somebody who's more equipped to probably develop the project.
Cool.
That's where I got my foot in the door, and then
you got a big foot.
Nah. Yeah. So now it is exciting, and just taking. I'm going to take a minute here in terms of taking a leap from your discussion earlier on sales and cost going up. And I keep saying this. Yes, the cost has gone up for commodities. Yes, the cost has gone up for diesel, petrol, all sorts of things that we use in daily life. But if you procure correctly, if your procurement strategy is correct, if you can detail out the project specifically for the construction division, I think you can limit, you cannot control cost increment. You can limit variations. You can limit unforeseens. You can limit the risk to a project. So if you know your numbers before you start a project, yes, we used to do our math at 160 pounds, 170 pounds to a square feet for a construction about 2 years back. Everybody is now working to 220, 230, 240 pounds to a square feet, depending upon the spec. So if the numbers work at 220, make sure they don't reach 300 by the end of the project. So you averse the risk. So there's no, and yes, if people are not moving from one house to the other, they're not buying something new. Similarly, are they not selling their own property? So the supply in the market also deteriorates. It's only the new builds that come to the market then. And for somebody like us as developers, it becomes an even more productive market to be in, where only our product is in the market and nobody's selling their own house to upgrade or to downsize. People are not really experimenting. So either we rent. So all our projects, we do the numbers both ways, right? You have exit strategies spread across, whether it's to sell or to hold. Rahul comes from a background where he tends to hold a lot of properties that he builds. At least 30 to 40% of whatever he builds, he holds on, rents them out. And that's probably what a senior developer does. That's probably what I would do in a few years' time. And in partnership with Rahul, I might just accelerate that process. But so the market is never going to be raw for new builds, for something which is built up to spec, something which is to the standard that the industry accepts. So till you keep building good stuff, it'll rent, it'll sell, something's going to happen. You won't have vacant, ghostly apartments or houses if you build them right way.
Yeah. Okay, that's a really, really good point. So just to be clear then on what actually the project is, we've been sort of talking around some really good points there, but the project itself, Wates House, is it's a commercial building. There's offices that is now going to be converted into 26 residential apartments. The plan is to sell the majority of the apartments on completion. And obviously it was mentioned there that the full planning requirement is in place. There's PD and full planning for some 9 apartments in airspace. And there is a projected 20% return on investment for the project. So that is the key headline figures. If one of you want to just speak briefly to the actual location of Fareham and why it's a good place to be building apartments.
Rahul, do you want to take cue for that? You want to sell the location?
No, location, Fareham, if you know, in Hampshire, it's a very upmarket location with a very high end user demand. So very little supply, and especially in the new homes. So that's why that was the key of choosing the location. As the market is shifting, we are trying to build quality homes to the end user locations. So where people would ready to, and these apartments are fairly bigger. So we had planning for 29, but we increased the sizes of the apartment to make it a more attractive, appealing for the end users. So in terms of location, there's a Portsmouth, which is only 10 minutes drive from the property, where the much economic activity is happening. From Guildford, Surrey, it's a 1 hour drive, and from London it's a 1.5 hour, and well connected by train. And within Fareham, the property in the right location, it means like it's a 5.5 mile from the town center, from all major within less than a mile from the train station, with all like amenities, shopping, everything is within the reach. So again, the whole idea is to get something which will appeal to the end users. So that's the market. This is where that's why we shortlisted that particular location.
Excellent. Okay. No, thank you. You've run that very, very well. It gives people a good feel for that. So Hietesh, do you want to do sort of the main parts of the deal, and then we'll go on the financials, and then we're heading towards conclusion?
Yes. So important to note, it's a projected ROI of 20% on the project, not annually. So more details are available in the entire equity of the document that has been published now. The estimated project length is 15 months, which is about 10 months to build, 10 to 12 months to build, and we've taken a buffer of about 3 to 5 months to sell. Sell enough to book profit so that the investors can have their returns back in the pocket. So the total raise amount is about 400K with a minimum of 200K. The minimum investment, as David always insists, is about £100 on this one. So, it could be a good learning experience. You could be a part of the journey, get regular updates on a monthly basis to what the project is doing, where it's at. And it's worthwhile mentioning, of the 15 months, we're already into the 6th week of those 15 months. All sorts of surveys have been completed in terms of asbestos contamination, a measured survey. So for the site, structural engineers are working for the detailing part of it. The M&Es have been appointed. I believe, as I can see, our architect is one of the attendees. So yes, Doug and Audrey are the architects. Space Plus, they're helping us to get to stage 4. We have our first design workshop on the 10th of May on site. So all's happening and things are progressing pretty quickly. We have already tendered the project out. It's not a regular design and build, and I emphasize on that fact is because we are trying to limit the amount of provisional sums in the contract. We are trying to limit the amount of commercial risks that the project can come with, because even a 5% movement on this bigger project puts us out of pocket by about 125 to 150K. Which is a sizable amount. So we're trying to limit that. We're trying to firm up all line items in the bill of quants and get to that stage where we can have a contractor on board with a firm price. So yes. So the entire professional team, stakeholder management has been completed. Basically, we filled up all the blanks there. The architects, structural engineers, M&E consultants, project managers, independent QS, all have been appointed for. Lenders, IMS is on board. Lenders, legal is on board. So there is no professional which we need to now hire further to this.
Yeah. Okay. No problem. So the maximum raise is 400,000, minimum raise is 200,000, and the minimum investment amount is £100. And as you say, Hietesh, I give you a hard time to make sure it's £100 minimum. That's because John gives me a hard time to make sure £100 minimum. And John, do you want to explain the education benefit to being involved in a project like this, even for a small investment?
It was a hard time explaining Rahul why it's £100 minimum. He wanted £10,000 too.
Well, over to John then. John, you've got
well, there's two things. One is it's an opportunity for investors to dip their toe in the water, get used to the process, get used to the developers or the people raising money to see if they're credible, and be sort of over time maybe make bigger investments. Second is the classic reason that developers or fundraisers don't want to have a small amount is they think it's a lot of work. Well, that means they just don't understand how the platform works. So it's an education for them that whether you have one investor or 1,000 investors, it's the same process. So you would make one payment to the platform fans out the money at the payoff. You do monthly announcements to the platform fans it out. So you're not taking phone calls, you're not schmoozing investors. It's very light touch when it comes to the amount of work, whether it's 1 or 1,000 as a fundraiser. And on the other side, it allows more people to get started, to get to build relationships, and over time decide that hey, these people are credible. They're taking care of me in the past. I'm gonna A, spread the word, B, put more money in, or show up as often as they have a deal. So it's a very positive first date to have a minimum investment that's something that people can afford to lose, because people really need to remember this is an investment. You can lose your money if things do not go as planned. So investments, capital's at risk. It's an investment you have to do your homework with.
Yeah, and a small, a lower entry level is a great way to build a brand and just reach out to more people. Okay, then Hitesh, you want to just run through just 1 or 2 of the key numbers on the right hand side, and then we'll just confirm the sort of the crowd financials.
Yeah, so we sit at a 5.97 million in terms of the GDV. We bought the SPV, so there's no stamp duty that we mentioned anywhere, because we bought the SPV that holds the asset. So there were both commercial and corporate lawyers involved. So we bought it for 1.8. Legal, survey, valuation fees, finder's fees, and all of that adds up to a certain cost to pocket that we've acquired the property for. Most of these costs have now been zeroed in, apart from the build contingency, build cost, and the prelims, because that's still out in the market, trying to negotiate the best price from the contractors. But we are pretty confident that this is the outside bandwidth of where we need to be. We will be within this, within the 2.5 million figure in terms of spending on site. So the profit margin that we showcase here is relatively, sorry, my phone's connected somehow to the iPad. But yes, so the profit margin that we show is relatively realistic. We're very confident about it, and that's why we just go through the equity offer document. Any questions, put it on the forum. We're more than happy to answer if people feel otherwise to what we think that we put out.
Yeah, so it's clear each project has its own forum. So there's a project on the Leo site, and go to the tab that says forum. Post your questions there. It's helpful if you put 1 question per post. So put it in the headline. That way people can see the question, other people can interact, more people can actually get comfortable that, hey, all these things are being addressed. This is good.
The key figure there really is obviously the net profit, the projected net profit of 1.2 million. That is the, if you like, the figure that then moves us on to the left-hand side of the page, which is thinking as a crowd investor. So you could potentially raise 400,000, Hitesh. You're giving a projected 20% return of 20%. And then we express that as a percentage of the net profit. So the crowd projected return is 6.55% of projected net profit. So that's how it's presented in the offer document. Now, what's really important to highlight to the crowd investors, if any happen to be relatively new on today or watching the recording on YouTube, this is a priority share, not a preference share. It's priority. The return can go up or down depending on the success of the project. However, what's really important to note is that the crowdfunding amount of 400 plus the 80,000 projected, and that gets paid back to the crowd investors before Hietesh and Rahul can take any profits from the deal. So the 1.2 net profit, let's just say it came in at 800,000 and not as high as they expected. The crowd still get their 480,000 returned before the SPV or the principals take any profit. And that's always a good thing to highlight, and obviously makes this, at least mitigates the risk a little bit in favor of the investors, which I think is very, very important. So if you, anything to wrap up on the financials, Hietesh, on that?
Not really. It's pretty pretty clear. Anything that I say, I'll be basically reading out the text that is right in front of us.
Yeah.
So the other thing, the important factor is the lenders on board. All numbers have been already filtered through the IMS of the lender. They've okayed to the cost of build, the cost of contingency that we put in, the professionals that we've taken into account for. So all of this accounted for. One needs to realize that RQS has looked through this. We've went out in the market asking for quotations. Most of the professional fees have been basically tendered out, contracted out, and the lenders IMS, which is the toughest stakeholder to convince, has already okayed this. He's ticked the box as well. So
what does IMS stand for?
Independent Monitoring Surveyor.
Okay.
So,
and David, to clarify a point, so I wouldn't say that the priority shares mitigates the risk. I would say the priority shares make sure that the people who are the passive investors stand in front of the people who have control of the project. So the risk is still the risk. It's just who gets paid if there's a limitation on how much money is available.
The difference of English language from an American to Brit.
Yeah, we get sued more in America, so we tend to say things in a more cautious way.
Yeah. Absolutely.
But
the risk is
one
always the
other
inherent risk for sure.
Yes.
But if you're in ahead of someone else in the queue, that's better than being back the queue. That's the point
true.
I was trying to make. You're not behind everybody else. You've actually got a place in the queue behind the senior debt, and therefore, if the project doesn't go as well as possible and you're ahead of others in the queue, then you're in a better position. That's the point
well, you're after all debt. There may be other debt when it comes to bills to be paid, suppliers, and all that. One other thing, just so everybody knows from a transparency point of view, CurationTech is a client of mine. I do work for them. It's probably documented in this raise document, but just want to get it into the recording that there's an inherent conflict of interest or of a vested interest. But I still think people should look at this. I think people can learn from reading each one of these. I do encourage you to read the whole thing and then read the shareholder agreement if you do pledge. Make sure it's what you think it is and that you want to go forward.
Yeah, and so just to finish up on that there, if someone goes to the homepage now, you can see the pitch page. You can see an overview section, financial section, team section, and then there is the forum where you can go and look at any of the questions that have been asked. And then once you're registered, you can download the equity offer document, which is pictured here on the right-hand side of the screen. And this is a really good document that covers all the detail of the project, a lot more about what Rahul and Hietesh have talked about. It's all in the document. I encourage you to read that and then make your decision if you feel you want to invest. Now, this does go live at 12 noon today. So if you are wanting to be involved in this and you want to get ready to make your decision, this will be live for investment at 12 noon. If you have any further questions, by all means, reach out to us. There'll be an email address at the end, and we'll get any questions you have answered. Or if anyone's any registration questions, then by all means, reach out to us, and we're on standby to try and answer those. So Rahul and Hietesh, looking forward to going live at 12. And we did a project webinar during the week with a number of investors on. And just looking forward now to accepting investment as it comes in.
Absolutely, yes. Fingers crossed. Let's see what happens.
Yeah. Okay. So listen, can I thank both Rahul and Hietesh for coming today and sharing that with us. And the recording will be on YouTube within about half an hour if anyone wants to go back over and just listen to anything that they said on that. So just in conclusion, next week the topic is understanding the effects of external events, policy changes, and global pandemics can have on the property market. So just having a bit of a discussion. I have a guest coming on, but they just didn't confirm, so I didn't want to put their screen up or their picture up on screen until they give me 100%. But they and John will have a very interesting discussion around this. No doubt John will have some questions for them. But that's what we're going to do next week. So that brings us to the end of today. There is the contact details. So any questions about the Wates House project or about registration or about making an investment, support at leocrowdfunding.com. Our investment portfolio manager is Dal, leocrowdfunding.com. So either of those email addresses will get us, and we're on standby to help you this morning. So again,
yeah, I think next week will be interesting too, because we'll have the vote in the UK across the local elections, and we'll see if there's any conversations about maybe local impacts. But again, housing's a long-term thing. So
yeah, it will be certainly interesting on that front. So okay. Well, before we dive into politics, which for them end up doing an hour-and-a-half broadcast if we bring into politics, so we'll definitely cut it there now. And again, thanks Hietesh, thanks Rahul, thanks John, thanks everyone for joining us.
Thank you for having us
again next Thursday.
Thank you.
Bye-bye.